Let's talk through, first of all, the structural changes that you're proposing to make, Jes. Welcome to Bloomberg. You are ring-fencing the UK bank will separate from Barclays Bank. Take me through what it's going to look like then in 5 years' time.
You know, this is completing the restructuring of Barclays and setting up the new organizational structure to reflect what our regulators have asked us to do. So we have Barclays, the group, and below that group we have two entities, Barclays UK, which is our UK consumer and small business bank, and Barclays International, which is the diversified transatlantic consumer and wholesale bank. So it's a new organizational structure. They're both supported by a service company. In total, we have roughly 81,000 employees, and so this is the new structure where we have both a wholesale bank and a consumer bank, but they are separated as legal entities.
Let's talk about the results, Jes. £1.1 billion. The market had penciled in £837 million. I want to get right to it. The investment bank. Talk me through the trading side of the business. I just did Deutsche Bank's numbers. Their trading dropped by 30%. How did you do?
First, the profit before tax number that you quoted was up 32% versus the third quarter of last year, and the attributable profits were up 44%. So obviously we're pleased with the progression. The bank's profitability in terms of a return on capital in the first 9 months of this year was slightly over 7%. That's versus a little bit over 4% last year. We also came out today with new targets. We're setting a new profitability target for 2019 at 9% and 2020 at 10%. But like the rest of the industry in the corporate and investment bank, trading in the markets business was quite muted. Volatility was very low, volumes were low. So like most of the industry in our markets business, we had revenues off sort of in the mid-20 level when you net out certain adjustments.
I suppose the question from investors, Jes, John Crine's going to face the same ones. I presume that you're going to face the same ones on the conference call. What is the toleration from shareholders for subpar? I'm talking about sub 10% return at the IB, Jes.
No, I think we have a goal and objective to deliver our cost of capital and higher to our shareholders. That's why we're setting a target for ourselves that in 2019 we will deliver an overall group return on equity of roughly 9% and 10% in 2020. And obviously the corporate and the investment bank has to make a significant contribution to that. But recognize the strategy of Barclays is to be a diversified global financial institution where we have a very profitable consumer and small business bank in the UK. We have a very profitable payments business. Our US card business is growing about 10% per annum top line. We just announced yesterday the co-brand relationship with Uber. That's a great opportunity for our US card business. It's on the back of winning the mandate with American Airlines last year. So we're going to grow from a variety of sources across the group, but getting the corporate investment bank to an acceptable level of in-state profitability is also a goal of this management team.
Can we drill in a little bit more? You talk about the UK and you talk about the credit card business. I want to understand, I mean, your British lending book, consumers are under a bit of pressure here. We got inflation, we got wages under pressure, we understand. Are you seeing any pressure in terms of repayments? Are we going to see perhaps you be a little bit more prudent and make more reserves for defaults?
You know, I think everyone is focused on a somewhat slower growth of the UK economy, although the last quarter was surprisingly came reasonably well. I think also people are expecting perhaps a return to a more normalized monetary policy soon. People are focused on the degree of consumer unsecured borrowing in the United Kingdom. We're aware of it. On the one hand, we're fully open for our clients and our customers. We want to continue to extend credit across the United Kingdom. But also we are looking at things like consumer confidence and the level of consumer debt, and we're adjusting our underwriting standards accordingly.
Okay, so would you disagree that as CEOs, you and your peers, that there's no spiral of complacency? You're not complacent at Barclays, as the Bank of England suggests that the British bankers are? No,
I don't think we are complacent. We're We want to maintain appropriately conservative underwriting standards. We have improved the capital ratio of this bank significantly. This time last year, our capital to risk-weighted asset ratio is a little north of 11%. Now it's north of 13%. So we are a much stronger, better capitalized bank this year than we were just 12 months ago. We are keeping our eye on the UK consumer, as is the Bank of England, as we all prudently should. But we also want to stay open for business for UK customers and clients.
You mentioned the Bank of England. You're taking me along the journey you want to go, Jes, aren't you? Let's talk about Mark Carney. Do you think that he should raise rates in November? And in your opinion, you see the consumer. Can the consumer handle that? Let's deal with those two first of all.
No, at the IMF meetings in Washington a week or so ago, the general consensus from all the central banks, the Bank of England, the Fed, the European Central Bank, is that economic growth has gotten to a point where central banks are beginning to return to a more normalized monetary policy. What that is going to mean is that interest rates do need to rise. Interest rates are at an historically low level. They've been this way for almost a decade now. It is time, I think, to begin to normalize monetary policy, and that will invariably mean some rise in interest rates. But we think that it'll be done in a way that preserves economic growth and doesn't challenge to any significant way the UK consumer or the UK borrower.
So if you sat down with Mark Carney and you said to him, look, I think you should do one and then hold back because of Brexit, would that be your far side recommendation?
We're going to leave the monetary policy to the excellent governor of the Bank of England. We'll clearly respond to any move, but I think normalizing monetary policy will be a good thing for the global economy and a good thing for the United Kingdom and ultimately a good thing for the financial.
Jes, you're setting new targets, which the market will assess. I suppose for me, as an interviewer, I want to know what that means for dividend policy. You've said that you may need, another year and a half, I think, originally, to generate acceptable returns. But what does that mean for the dividend policy, Jes?
Yeah, so if you go back to March of 2016, we set targets to define the completion of the restructuring of Barclays, including the sale of our controlling interest in Barclays Africa, to reducing the balance sheet by some £300 billion, to reducing the headcount by some 60,000 people, closing our non-core unit. We've accomplished all of that within the last 2 years. So now it's time to focus on profitability. That's why we've set the target of 9% ROTE for 2019 and 10% for 2020. That gets the management solely focused on generating better returns across the Barclays platform. With respect to the dividend, we've said that we will reassess our capital management policy at the year-end results, i.e. next February. So I'll leave the dividend question to next February.
You'll leave it till next February. Help me with this. The German banks are in change mode as well. You're in change mode also. The flow of business, I'm looking at what we're breaking down here. Your market revenue dropped by 31%. Macro was down 40%, equities down 24%, and credit down 22%. Are you losing customers, Jes, or what is happening with the landscape of customers on the investment banking side?
Well, one of the things that you do need to make an adjustment for, we closed the non-core business in June of this year, so a couple of months ago. That had about 23 billion pounds of risk-weighted assets in it. When we closed non-core, we did incorporate some of that assets back into the corporate and the investment bank. If you adjust for that, our markets business was actually down about 25%. Still, it's not something that we want to see a better performance there. It really hasn't impacted our market share. Our market share is actually held in there, given what the other banks have done. But clearly, I think all of us expect a return to more normalized levels of volatility and volumes and a recovery in market revenues across the investment banking space.
Jes, just to finish off with a more markets question, you've been in these markets many years. You've seen many highs, many lows. You've lived through the crisis. I suppose what I really want to know is what irks you the most, record after record in the S&P, or the amount of betting against volatility? $2 trillion. And I'm just looking at some of the numbers. 1.4 trillion was the number that the market bet against subprime. So, Jes Staley, are you worried about markets as we go into the back of 2017, or should I be vainglorious and join you on a parade into 2018? What worries you the most about markets?
I think we're coming out of an historic experiment in using monetary policy to try to drive economic growth. We've been running with very low, if not zero levels of risk-free interest rates for a long period of time. That does some very funny things to asset values across all markets. As we begin to unwind that monetary policy of such easing, I think we all have to keep a watchful eye on asset valuations across all markets.